What is up, guys? My name is Hassan and welcome back to another dividend investing. I hope everyone's doing well, especially with this coronavirus going on worldwide. And we're going to be talking about that just in a minute. So you guys can see that this is my Robinhood portfolio. The market is actually live right now. That's why you can see it like every few seconds my portfolio. Actually, the number will change. And you see it changed right here. So let's talk about the market and the coronavirus has been going on around the world. How the stock market has performed during the past viral outbreaks as coronavirus infects 31,000, and this is as of February 7th, so like almost a week ago or 6 days ago. And so there's a lot more people affected, a lot more people dead. What I want to do is I want to cover how this virus or these outbreaks, worldwide outbreaks, actually affects the stock market. So let's scroll down and to see how they react. So we're going to scroll down a little bit. And this is the chart that I was looking for. So this chart here shows us the academics and the global stock market performance. We can see like HIV, SARS, swine flu, we have Ebola, Zika, and so on. So you can see that all these outbreaks have been occurring worldwide throughout time, but it doesn't really affect the stock market in the long run. Overall, the trend here, we can see that it's up, which is good for us as a smart investor. So, but if we look at the 1 month chart right here, so like for example, Zika, for that month when it came out, for that 1 month, it was down about 6%. Ebola was down 7%. And then if we look at some other ones, it's down like 2%. But overall, the trend is up. So it doesn't matter these outbreaks occur or not. I think that these are buying opportunities. Like a week ago, when the market was crashing because of this virus, I was heavily buying into my companies, which I'll show you guys later on another video on my buys and sells. So my point is that we should be, as smart investors, we should be buying at these opportunities. Whenever the market dips, we buy solid fundamental companies and we keep investing and keep letting our portfolio grow. As always, before I get started and show you guys my portfolio and my dividends, I just want to provide a quick disclaimer right here, and that I'm not a financial advisor, nor do I know you personally. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions, and that does not mean you go out and buy these stocks. It is just a place for you to start your due diligence. At the same time, you guys should not be following any random YouTubers buying and selling without actually holding yourself accountable. As always, I'm also not an Islamic scholar. I cannot tell you what's halal, what's haram. It's up to you to talk to your local imam and the people that you follow to see if that's right for you, if this investment is right for you. Since we got that out of the way, make sure you guys also check out the disclaimer in the description below. So let's head over to my portfolio. $14,100, $14,100. So for 1 day, the market is red today. It's Thursday. It doesn't matter if it's any of the day, but it has to do. I'm not sure why the market is down. I really don't care because I know that in the long run, my company is going to do really well. So 1 week, I'm up about 2% or $292. And then if we look at for the 1 month, here I'm up 101%, not much of a difference. And then if we look at for the 3-month chart, that I'm up almost 6.5%, almost $850. And then if we look at for the 1 year chart, I'm up about almost 11%. Which is historically good. I'll take the 11% and run with it because my portfolio is designed in a way that I collect dividends. Even though you guys see there's a lot of volatility, I've been buying every time it's been dipping. I buy a lot, and just as it goes up, I lower my buys, or I don't buy as aggressively, and it dips, I'm keep buying because I don't know when the market will go up or go down, but I know that when it's down, it's time to buy. So in the last 1 year, I'm up about 11%. And then I also collect my monthly dividend because my portfolio is majority in dividend investing. So guys, if you haven't subscribed yet, hit the subscribe button. It really helps my channel grow. And just hit a support, and it just supports me. And just hit a like and comment in the video. So now I want to show you guys one of my main objective of my portfolio is dividend investing. And I think that's why you guys are here also, for this dividend investment. So here we can see is my monthly dividend chart. And I'm going to go over the last few months. You can see that the overall trend here, it's up. And that's how I track my portfolio, is my monthly income increasing month after month. So if we look at, say, August, I got about $16, and then September, $30, and then October, $18. You guys can see it right here. And then November 23, December was my largest income so far, $42, and then January, $19. One of the reasons why this dipped a little bit in January, because a lot of my companies just don't pay on January. They mostly pay on, like, say, September and December, or June or March. So my next one, usually my January is low. Like if we look at last year, January, I made $0. But this January, 1 year later, I'm making $19, which I think is a tremendous growth. Another thing I want to point out is that I took my average for the last 6 months to see how I'm doing. I'm averaging about $25, you guys can see right here. And if I compare it to my January, it's actually lower. So my average January is actually lower. And for the last 12 months, if you look at it, or 13 months, I'm making about $217. So guys, a lot of you guys know I have two portfolios. I have one M1 finance portfolio, and then I have a Robinhood portfolio. And this dividend chart that you see here is Robinhood portfolio. So I made $19 for the month of January, and my M1 finance portfolio, I made $12.99, or almost $13. So if I combine these two, I get a total of $32 cash dividend that's been paid to me as just being an investor. The way I look at it is like, literally, this is my income that I really didn't have to work. I got paid while having my day job by holding on to these companies. They just paid me $32. And with this, soon I should be able to pay my bills with it. That's why I'm going to take you guys a little bit down here. So here is my monthly breakdown for January. So January electricity bill was about $40, gas $40, and then my internet bill was $48. And then if we go down, which is a total expense for only these three criterias, is about $128. And so if I do my investment, which is about $32, my utilities cost is about $128. So if we do that, I'm actually on negative, so I can't sustain myself using these dividends, not yet at least. So for the month of January, I'm actually down $95, which I'm not down, it's just in terms of paying my expense. But I think actually I'm doing a lot better, because December I was down 110 in the negative this year in terms of my investments and my utilities. And then January I'm down $95. Eventually, as time goes on, as my dividend here increases month after month, my dividend investment should far exceed my cost of living, or at least for those three bills. So guys, as always, hit the subscribe button to support. Now what I want to show you guys is I want to cover a question. So this question was actually left off by one of my viewers. The question is, will you be using M1 Borrow once you hit $10,000 to invest even more? And then he continues on saying, might be a good idea after a big market crash, or if or when it occurs. So a lot of you guys know I have two portfolios. In my M1 Finance, I actually currently have about $8,000. So soon, within 2 months, I should be, or 2-3 months, I should be, I think 2 months. 2 months, I should hit 10K. And they're saying that, will I be borrowing money to invest more? I highly doubt it, because if we look at the stock market, most of the companies out there are very heavily leveraged, meaning that they borrow a lot of money to invest there to grow their company. So the company is already highly leveraged. If I come in as an investor, borrow money to invest in a company that's already highly leveraged, that just adds tremendous amount of risk. So I really don't recommend anybody borrowing money to invest. That's how one of the Great Depression occurred. I think 1930s, around there. How a lot of everybody was talking about the stock market. People were just borrowing money to invest. Eventually, the bubble popped and the market crashed. So I think that borrowing money to invest is actually a terrible idea. I recommend everybody staying away. All right, so now I'm gonna actually get to my Robinhood portfolio. I'm gonna show you guys some of the holdings that I actually have. So here I have $14,100, and I'm gonna be showing you guys my holdings that I have right now. So one of my first holdings that I have is Baozong. I have about 50 shares. And yeah, it's about 12.14% of my portfolio. It's actually high because eventually I want to get all my holdings 5% or lower to reduce my risk. I'm not looking to add any more, nor am I looking to buy any more shares of Baozong. So and then I have AMD, 32 shares. And then what else do I have? I have Waste Management, 10 shares. I have 3M, about 7 shares. I've been actually buying a lot more of this. And then I have Texas Instruments. Get back. So I have about 3M. I have about 7 shares right here. Recently, as the dip occurred, I bought a few more. Texas Instrument, I have 8 shares. So anything that I have under like 10 shares, I'm looking to buy more, or at least get up to 10 shares. And then I have Pembina. It's a oil pipeline company. It's about 25 shares. I'm looking, actually it's higher because my average cost is around $36, and I'm actually looking to buy more. But as it dips, so VET oil pipeline company, another company that actually I'm down on, it pays monthly dividend. I have 50 shares, and I'm not looking to add any more. Microsoft, everybody knows about that, 3 shares, not looking to add any more. Nvidia, 2 shares. Even though I'm a dividend investor, the reason why I'm invested in Nvidia is because I think that they have a lot of growth potential, and they pay a dividend. I think it's like 16 cents per share. So if they didn't pay the 16 cents, most likely I wouldn't have bought it. So thank God for that 16 shares. Johnson & Johnson, 3 shares. And then I have PetMed, 15 shares. So if you guys look at, once you guys do your own due diligence, if you look at my holding, almost all my companies have little to no debt. That's one of the main primary reasons why I invest in a company and for their dividend. Because I'm here to reduce my risk. Most people look at how much money they can make. I look at how much money I can lose. So I'm going to reduce my risk because I want to preserve my capital, and eventually one day I want to pull as I increase my income or live off of it, some of this money I will use to invest in a real estate property. But as for now, I want to use, but we don't know when that's going to happen. But as far as right now, it's for my monthly income. And then I have Pfizer's, 10 shares, Honeywell, 2 shares, Broadcom, 1 share, Cisco, I'm actually looking to add more, 5 shares, Skyworks Solution, I have 2 shares. And then I got packaging company, PKG, I'm buying more of this, 2 shares. Gentex, another solid company, 6 shares. Macy's, I'm actually looking to move away from this company. I want to sell out of it. About 10 shares. I have VFC, 2 shares. High Crush, I got 189 shares. So one of the things is that I made a mistake is that when this company cut their dividend, I think I'm down almost 90%. So I'm almost, if you look at my portfolio, almost, I would say in the long run, I make 85 to 90% of my company makes me money, or I do well, more than I make more than what I bought it for. And High Crush is one of the companies I lost money in because when they cut their dividend, I did not sell. And that's one of the key fundamental rules that I established after this company, that if the company he cuts their dividend, no matter what, the next day I'm down 20, 30%, 30, 40%. I'm selling it right there and moving on, because my sole purpose for this account is to eventually grow my dividends and to live off the dividends. So if the company is not paying its dividends, I no longer need it. Tapestry, 5 shares. Take a look. American Solutions, 8 shares. Rio, a recent addition to my portfolio, 2 shares. Ericsson, and then National Instrument. Guys, if you guys made it this far, make sure you guys subscribe, hit the like button. As always, thank you. See you next time.